Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. It is the weekend webinar dated for May 10th, 2008. And traders, I've been telling you that technical analysis and trading the markets is like reading a story. And you stay within that story and you hope to get through each chapter unscathed without getting stopped out. And you try to get this right. You read the analysis correctly and you let the charts speak for themselves. And I tell you all the time that fundamentals always come out in the charts first, and they always do. And I have some charts I'm going to show you that will surely illustrate that for you. Now, traders, we've had a rough and tumble last 2 weeks in the markets. Thank goodness at the Omni Trading Academy, somehow we got through it without getting stopped out. I mean, I don't know if we've had one or two bad trades through this whole time. It has been really good. You Omniacs know that we've done really fantastic trading through this really rough period. And traders, we are still at that pinnacle area where the markets are uncertain. However, if you remember, I've had Don't Fall in Love with the Upside on my board all through the down move. And then a couple of weeks ago, we took Don't Fall in Love with the Upside off the board. And the markets did start to move up, but now the technical analysis is telling me that most likely, don't fall in love with the upside. It's not 100% back on my board, but it's getting a lot closer to reappearing. Yes, you know I've been bearishly bullish, I guess, slightly bullish through this up move, but one leg surely planted in the bear camp, and that leg now is starting to get a little more weight. And these charts I'm about to show you now will illustrate why it's starting to reappear on the board. Don't fall in love with the upside. So traders, let's go through the story now and let me show you where we are and where we're leaving off as of Friday afternoon's trading and what we're going to have to look forward to into Monday, Tuesday. With no further ado, traders, let's go to the charts. Okay, traders, the first chart in this story is the Dow Jones Industrial Average Daily Bar. Take a look at this, traders. Very interesting. As we all know, the upright head and shoulders is the thing that knocked us down and began the bear market last year into the beginning of this year. But here's what's really important here, traders. Look at this. We just got to the 200 bar, all-important moving average. And the market failed right at it and started to come off. Failed right there and started to back off. And that is very key. A lot of fund managers in this world key off of that 200 bar average. More importantly, or to add to the story of importance of why we're starting to look more at the downside again, is this. Major trend line resistance right from the top of the move. We got above it and just settled below it again on Friday. That test went up, hit the 200 bar moving average and settled below the major resistance. Now look at this. There's also the major support right here off the bottoms. We settled below that as well. Now you bounced off the 200 bar and dropped, got back below the major resistance and is now below the major support. That is not bullish if you're a technical analyst. Now, why is it tricky right here still? Because lots of markets will test something like this and then turn around and shoot back up. So you're not 100% sure if the downside's coming again until you start settling below this just a little bit, and then we can move lower. Let's look at some more charts here. Oh, the next chart that you're going to see in the story, and the story is getting interesting, is the NASDAQ June daily bar chart. Failure at the 200 bar average and broke down through the major support right here. Here's where we are right now in time, traders. You see that right through the support, and there it is. That is a market that is beginning to show signs of failure. We followed the Dow Jones Transportation's average up, but it hit the 200 bar average like many other indices and backed right off, traders. I don't know how many of you followed these moving averages on the upside, but when we were bullish, we stayed above that 200 bar, and when we finally got below it, we turned into a bear market. Now, after all that time being under it, it runs up, tests it, and fails. That to me is a bearish indicator. Let's look at a few more charts here. Okay, traders, the June S&P daily bar, once again, look at this. The upright head and shoulders knocks us down, but the all-important 200 bar moving average keeps us absolutely in check. We are under it. We put in what's called an inverted head and shoulders, which should be bullish, but you've heard me tell you many times in these videos that in a bearish market, which is what this is right now, an inverted head and shoulders likely gives you a bounce up and then a turnaround break if you're in a bearish market. In a bullish market, an inverted head and shoulders has the tendency of being a continuation pattern. But in a bearish market, it has a tendency of just getting you to top out and break down below the inverted head and shoulders. So if that is what normally happens, you did have your bounce and you're starting to come down now, and once again, another indice gets below the major support and settles right here, below the major support. So far, this inverted head and shoulders is playing out just like we said it would up here. It goes up a little, don't fall in love with the upside, and then some downside action takes place. Let's look at some more charts here. Okay, traders, the next chart you are looking at is the E-mini Russell, and once again, the story continues to show the same thing. Inverted head and shoulders. It gives you a rally which fails, and now you are below major support. If you're below major support in a lot of the indices, the likelihood is some downside action will ensue. Traders, keep in mind that crude oil is just about at $125 a barrel. That has to put weight on the shoulders of the S&P and all the other indices that make up our stock market. I kid you not, at $125, it is very expensive to be shipping your products around, and it's even more expensive for us consumers to go to the store and buy them. That comes out in the charts, and it certainly turns fundamentals of stock companies bearish. Okay, traders, when you're looking at analysis, you have to look at the forest, being the longer-term charts, in order to figure out how to cut a path through the trees, being the shorter-term charts. Here's the forest because it is a weekly of the Dow Jones Industrial Average. And what's happening here, traders, is in a longer-term view, and each one of these green bars represents a full week's worth of trading, we have an upright head and shoulders, traders. An upright head and shoulders in a bullish looking chart produces a down move. We've had this down move in the S&P and a lot of other charts on the dailies, but now look at the weeklies. They are beginning to put in signs that this is an extremely broad top, and we have some trouble coming our way in the stock indices. Here is the all-important 200 bar average, but this is a 200 week average right now, and that's a long average. I think we're going to start to head back down and test that average. Getting below that would be really scary, but we take one day at a time here at the Omni Trading Academy. But you must look at the forest if you are going to figure out how to navigate through the trees. Traders, the next chart in this long story of trading is the S&P Cash Weekly Bar Chart. The all-important Omni Trading Academy's proprietary moving average has absolutely kept this market in check on the way up, and now look what it did on the way down. We broke down through it, it rallied up, just about tested it, and we are starting to head back down, traders. That is very, very significant. In order to get into the bull camp, you would have needed to gotten above this and started to rally. It has failed there, like the NASDAQ failed at the 200 bar, like the Dow Jones Industrial failed at the 200 bar, like the S&P failed at the 200 bar. Now the S&P Cash Weekly shows you the same look. Dailies and weeklies giving the same look is almost a non-event for the upside, and is surely pointing towards the downside. Let's take a look at a couple of more charts here. Okay, traders, another look at weeklies, which again is the forest versus the short-term trees. And we have another proprietary moving average we like to use at the Omni Trading Academy. This is an average I haven't even debuted for any of you Omniacs yet. This is a personal average I like to use. And we failed once again in the ER2 right at that average. The E-mini Russell hits it and fails. And look what the weekly's producing, traders. What is that back there, guys?
A head and shoulders, upright head and shoulders.
Upright head and shoulders, right? You guys are really coming along as students back there. Round of applause for you guys. All right. So here it is, another look at what possibly is a huge broad top and a failure at a very important average with an upright head and shoulders. Traders, don't fall in love with the upside. It's starting to get brighter and brighter on my board. I wish I didn't have to put it back on. But when you look at analysis like this, and I kid you not, fundamentals always come out in the charts first. It's not giving me a choice. I have to go back into bear camp most likely. Let's see what we got going forward. Okay, traders, continuing with the story. As you've heard me say, the Dow Jones Transportation Average is the leader, right? Well, here is the weekly Dow Jones Transports Average and another head and shoulders looking formation, and we failed to get to contract highs, which would have been here. We only got to here, but that could still qualify as a double top, traders. On a weekly, that might have been it, and as analysts, weeks later, we'll have to call that a double top. But we're very proactive here at the Omni Trading Academy, and we like to call things as they happen, not after the fact. And as this is happening, you might as well say almost, or relatively speaking, a double top has been put in and the markets are beginning to back off. If this is our leader and it really does start to come off here on the weekly, we got some downside trouble coming our way in the S&P and the NASDAQ. Now, the next chart I'm going to show you should summarize this chapter of the story that we are in. Okay, traders, the next chart we're looking at is the CRB Index. The CRB Index, Commodity Research Bureau's index, is a measure of inflation. And if inflation's coming our way, that means the stock market gets hammered once again. And the CRB is made up of corn, soybeans, wheat, cattle, hogs, gold, silver, copper, cocoa, coffee, sugar, cotton, orange juice, platinum, crude oil, heating oil, and natural gas. Those commodities, I assure you, are being used in just about every product under the sun. What you're not using to make products, you're ingesting as humans that need to eat and drink. And if that's more expensive, that is inflation. And if inflation's coming our way, the product prices get more expensive, and it gets more expensive for you to go buy them on top of the gas you got to spend to get there. Traders, the picture is not good. It's starting to already lean back towards a dead cat bounce is all we've seen for the past couple of weeks. Now look at this, traders, really important. The Omni Trading Academy's proprietary moving average, the markets came down to it, touched it, and broke out, took off. More importantly, for you traders who have been at my academy long enough, you know that we look at this and we say, here's the apex. And at the 75% mark of an apex, the market usually blows out. At the 65% mark, it puts in a false test. You got a false test right here of the downside at the 65% mark. And look what it does. It blows out at the 75% mark. And here we are. Traders, what else can we say? That is a very bullish look. Most likely, CRB index is heading for new highs all the way up here. And that will not bode well for the bulls who are trying to get long the stocks. Take a look at this for yourselves, traders. That is a very, very interesting chart. So you've seen those charts, right? I mean, what more do we need to know? That this is a really tricky area, but absolutely starting to point towards that downside. And for that reason, once again, I have to point to it. Don't fall in love with the upside. Soon I'm going to be going, don't fall over the upside again, traders, but you never know. And I am proactive, as I said, and we don't call the markets and tell the markets what to do. The markets call on us and we listen and they tell us what to do. And if you would like to learn how to do what I'm doing right here, because I teach it to every Omniac that comes to my site, come on down to www.livewithoscar.com, grab a membership, and let me teach you how to view the charts and how to view these markets the way I view them, the way we view them at the Omni Trading Academy, and the way you need to view them to get your emotions out of this thing and let the markets speak to you. Okay, traders, I hope these webinars on the weekend I put together really give you a good look at the charts. at what fundamentals are likely coming out in the charts, and at how you should behave going forward. All right, traders, I got my son's baseball game about 10 minutes ago, so I can't spend much more time here. But we got the Mandalay Bay Money Show. It starts on Monday, traders. This is Saturday. On Monday, we rock and roll at the Mandalay Bay for the Money Show. Make sure you traders get down there and come meet us in the booth. Become an Omniac. Don't trade alone. Traders never trade alone. I put it on my board every day because the response I get from all the Omniacs that I put in one central area in a chat room with me on camera and microphone, helping them get through the day, helping them understand the analysis and how to get in and out of trades as a 26-year veteran trader would do, is invaluable for you traders. It is invaluable. Come to the site and ask the Omniacs. They will, I assure you, testify that this is a great place to learn how to get this right. Or if nothing else, it's a great place to learn technical analysis. Okay, traders, give me a call anytime, day or night, 702-629-4755. And if you like this video, there are 312 videos just like this one on YouTube. We have a YouTube presence where you can watch each and every one of them and learn, catch up to where we are in the story now, and then learn how to do this going forward. You can come to the youtube.com/futures analysts. When you get there, subscribe to the videos so you know whenever we put one out and you can watch it and leave comments on those videos, traders. I assure you I will answer your comments. All right, that's just about it. I'll give you the email in case you want to shoot me out a chart or some sort of a note. Email Oscar@futuresanalysts.com if you want me to review some of your work. And that's about it, traders. I'm going to play some baseball now with the kids, so I'm getting out of here. Don't forget, Sadie's D7s every morning, every afternoon, every evening. Make sure you keep your emotions out of trading, and the best way to do that is to Sadie's D7s, and you know what that is? Stops are in! Emotions are out!
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.